Hi everyone, it's Alyssa Corman, Ed Carson here with your market update on this Monday. On today's show, we are taking a look at Amazon and Centene, plus checking in on what's happening in Brazil. So taking a look at the major indexes, the sell-off is continuing. The NASDAQ at a session low, down about 1.5%. We have the S&P 500 and the Dow down about 0.7%. You know, it's interesting because a little earlier, the major indexes tried to head into positive territory, but it looks like the bears are really taking hold here.
Yeah, I mean, the S&P 500 is down below its 50-day moving average. That's why we're taking a look at that. The NASDAQ already was below that last week. You know, there's a lot of weakness. Software stocks are losers again today. They were really big losers last week. 8 of the 10 software groups were down 5% or more, and the other 2 were down 3%. Chip stocks down through their 200-day line. And we're just seeing a lot of weakness. It's definitely something, the market is under pressure. Market's under continued pressure today. So investors should be thinking about, you know, cutting, taking gains, profits, consider it. Definitely being very, very cautious and cutting losses short. You know, not a time to have the leash running out long.
Exactly. So would you say with the weakness in software as well as chips, is that really a signal of sector rotation or just kind of a signal that we are in this sell-off here and it could last for a little while? There
had been some indications that we had some rotation, but energy is not doing particularly well because that's so driven by oil prices, and that was, not really moving. It was down a little bit. Some of the industrials, I mean, there's a little bit there. Financials, it's really, they haven't really moved. I mean, they were sort of like some tentative moves, but right now it seems to be more weakness than rotation.
Right. Well, taking a look at one stock that has been leading this year that is showing weakness, that is Amazon. After undercutting that 50-day line last week, we have Amazon now at a session low, down about 2.6% here. It did try to turn positive for a little bit along with the major indexes, but the FANG stocks, which are typically seen as, at least Amazon this year, one of the leading names, not looking too good around a key support level.
Yeah, I mean, Amazon and Netflix both below the 50-day line last week. Facebook and Google have already been below that. I mean, the FANGs, they're not as leaders as much as they were. I mean, Amazon's still, yes, but these have been really big drivers. They're a huge share of, the NASDAQ, and these are all now below their 50-day lines. The first time they've all been down below the 50-day since late April, mostly because of Amazon staying above that point. But it's just a reflection of the weakness in the market. You're looking around, certainly in the tech sector, there's really not a whole lot of positives out there.
That's right. Well, checking in on Brazil, we have a Brazil ETF up over 5% here. It has come off of the session high a little bit, but the positive action here sparked by what's going on in the political sphere. So could you give us a little insight on that?
Well, yeah, the right-wing candidate there, he won with, he didn't win outright. He got 46%, much better than expected. He has a pro-market viewpoint, at least lately has, but there are concerns that he was authoritarian, that he'll undermine democracy there. But obviously the stocks have rallied. There's a lot of concern about corruption, of just chaos in Brazil's Congress. Then maybe the thought is that somebody who can get a mandate can push through big budget reforms. I mean, whether or not that would be the case, Brazil's stock market is reacting in that way. So it's something to look at because this has been a real weak market. The economy's been in real trouble for the last few years. It'll be interesting. There's going to be a runoff later this month.
That's right. Definitely an interesting development there today. And last but not least, we want to check in on Centene stock. The stock is down slightly today amid the sell-off, but it has a new buy point, and it's part of a group that has been holding up amid the sell-off in the medical sector. These health insurers have kind of been bucking the downtrend here.
Yeah, and Centene's been, if not the best, one of the best in the group. It had a nice breakout from April. It's our IBD stock of the day. This group had gone on a good run. You can see how it's forming the space. If you look at that blue line, the relative strength line is actually right near all-time highs. It's really done very well. This has been a leading stock in a leading group. Again, it's a tough market. It's not clear. I mean, in this kind of environment, even good stocks can come down. And so it's, so there's definitely risk involved, but it's definitely one to watch. This group is one to watch. It's definitely in the top 20 of the groups, and it's been doing well.
That's right, Centene, highest possible composite rating of 99. That's definitely a good stat there. But with the sell-off here, shares are now testing support at that key 50-day line, so that'll definitely be an area to watch, although the turnover is below average, so we're not seeing heavy volume selling into this stock. So, but that's definitely something that you're going to want to watch.
I mean, you might think in this kind of environment that a health insurer would be one of those kind of growth defensive stocks. It's growing, but you know there's going to be steady. It's not like everybody's going to quit their health insurance,
right.
Over the next. So that's probably something that's a little bit safer than certain other areas in the growth sphere.
That's right. Well, a potential name to watch there for your watch list, and make sure to head to investors.com to check out the Stock of the Day article. All right, everyone, be sure to head to investors.com. Not only for the Stock of the Day, but for all of our latest market news and analysis. And you can also check us out across social media. We are on Facebook, YouTube, Instagram, and Twitter. Thanks for watching us today, and we'll see you back here tomorrow.